down 13.18%. That is the massive single-day drop we just witnessed in shares of Micron. It forces all of us to ask a very serious question. Has the incredible momentum carrying the AI tech sector finally broken?
Hello everyone, welcome back to AI Market News. Today, we're looking at how the relentless AI rally has hit a wall and why Micron's upcoming earnings report might decide the entire market's next move. After watching a historic surge in semiconductor and artificial intelligence stocks for months, we're suddenly seeing real cracks in the foundation. As we can see in the chart, there are distinct downward red candles forming on both the Nasdaq and the S&P 500. Based on available data, the tech-heavy Nasdaq took a significant 2.21% slide, dropping nearly 580 points to close near the 25,587 level. At the same time, the S&P 500 dropped 1.44%. The upward momentum we've grown so accustomed to has sharply reversed course. Now, what exactly is happening here? It's essential to understand the underlying mechanism of a market pullback or profit-taking. After a massive, prolonged rally in AI stocks, investors often sell shares to lock in their actual cash profits. This concentrated selling creates a temporary downward pressure on prices, even if the companies themselves remain fundamentally strong. It's a natural part of the market cycle for all of us invested in these high-growth areas. And the tech sector casualties are piling up quickly across the board. Beyond Micron plunging 13.18%, we saw Intel drop 6.14%, Nvidia slide 4.13%, and AMD fall by 5.76%. So, the crucial point is that Micron's double-digit drop places an enormous spotlight on their upcoming earnings. If their numbers disappoint, it could validate this aggressive sell-off across the industry. But if they impress, it could completely stabilize the sector. Of course, this tech weakness isn't contained to the United States. The Nikkei 225, Nikkei Ninigo, is clearly mirroring this U.S. caution. As the graph shows, our local index has followed the U.S. tech sector lower, dropping toward the 69,275 level with a series of steep declines. When Wall Street technology stumbles, Japanese tech and semiconductor components often feel the immediate ripple effect, bringing the broader index down with them. While equities are pulling back, the currency markets are telling a very different story. According to current market information, the USDJPY dollar-yen continues its relentless upward march. We are now pushing past the 161.725 mark, showcasing sustained strength in the US dollar against the yen. Why does a weaker yen matter so much for our markets right now? Let's break down the underlying mechanism. A weaker yen boosts the profits of our major Japanese exporters because when they sell goods overseas and convert those dollars back home, they receive more yen. However, it simultaneously hurts all of us domestically by driving up the cost of imported energy, food, and goods, which squeezes local businesses and household budgets. Beneath these daily price changes lies the psychological undercurrent of the market. We track this using frameworks like the Fear and Greed Index to gauge indicators such as market momentum, volatility, and safe haven demand. Right now, we're tracking whether money is fleeing these volatile tech stocks for safer government bonds. When safe haven demand rises, it's a clear signal that fear is starting to outweigh greed. Looking at the chart, we can see the VIX, widely known as the Fear Index, sitting at 19.27. What does this mean? Well, this index measures expected 30-day price fluctuations in the S&P 500 based on options trading. Essentially, it tracks how nervous we all are about imminent market drops. A rising VIX confirms that anxiety and caution are returning to the trading floor. Looking ahead, we need to be prepared for the next potential catalysts. Our economic calendar highlights a precise timeline of upcoming events we must watch closely. At 7 a.m. ET, we have U.S. new home sales data. Then, crucially for our local markets, at 1300 JST, BOJ Governor Ueda will be speaking. Following that, back in the U.S. at 1300 ET, the Federal Reserve Bank stress test results will be released.
Why are these specific events so critical? Here's the catalyst mechanism. Central bank speeches and housing data are heavily scrutinized because they signal future interest rate moves. These interest rates directly dictate the cost of borrowing for companies, and they determine the yield attractiveness of the US dollar versus the yen. Any hint from Governor Ueda about policy shifts could instantly swing both the currency and equity markets.
So, we find ourselves at a critical crossroads. Will Micron's earnings reignite the tech rally, or is this AI correction just beginning? The answers will dictate the tone for all of us in the days ahead. Thanks for watching. Please subscribe and hit the like button.
This video was automatically generated by NotebookLM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.